the 3 psychological traps that destroy trading accounts. Let me ask you a brutal question. If I took your trading strategy today, your entries, your stop-loss rules, your risk to reward, and gave it to a disciplined trader, would they grow their account while you blow yours? If that question made you uncomfortable, good. Because today's video might save your trading career. Most traders don't fail because their strategy is bad. They fail because their mind quietly sabotages them. And the scary part, you don't even notice it happening until your account balance does the noticing for you. Today, I'm breaking down the 3 psychological traps that destroy trading accounts. Traps I personally fell into, traps I still actively manage, and traps that no indicator, no expert advisor, and no mentor can save you from. If you've ever revenge traded, moved a stop loss just a little, or told yourself, this one can't lose, then this video is for you. Let's get into it. What's up, traders? Welcome back to the channel. If you're new here, this channel is all about trading psychology, discipline, and surviving the mental game. Not hype, not lumbos, not fake screenshots. I've blown accounts. I've overtraded. I've stared at charts at 3 a.m. wondering how one bad decision turned into 10. So when I talk about psychology, I'm not quoting a book. I'm talking from painfully expensive experience. Now let's talk about the first psychological trap. Trap number 1, the need to be right. This is the silent destroyer. Not greed, not fear. Ego. The need to be right. Early in my trading journey, I didn't want to make money. I wanted the market to respect me. I wanted price to say, yes, you were smart to draw that line. So when a trade went against me, I didn't see risk. I saw an insult. And insults must be corrected. So what did I do? I widened stop losses. I added to losers. I refused to exit. Because I couldn't accept being wrong. Here's the problem. The market does not reward intelligence. It rewards discipline. You can be right on analysis and still lose money. You can be wrong on direction and still be profitable. But if your identity is tied to being right, you will hold losers too long, cut winners too early, and argue with price instead of listening to it. I once held a losing trade for hours, not because my setup was valid, but because I had already imagined telling someone, see, I called that move. That trade didn't care about my imagination. It wiped out a week of gains. Hard truth. The market doesn't pay you for confidence. It pays you for risk management. But how do you escape from this trap? Detach your ego from outcomes. A professional trader thinks like this. This trade is either a small loss or a normal win. Nothing else. No drama. No ego. No identity crisis. Your job is not to predict. Your job is to execute probabilities. Trap number 2, the illusion of control. This is sneaky. It usually shows up after a winning streak. You win 3 trades in a row, then 4, then 6, and suddenly you start feeling like, I understand the market now. That's when the danger starts. You increase lot size. You reduce stop-loss distance. You start entering early because you know what will happen. And when the market reminds you that it owes you nothing, you're overexposed. I remember one week where everything worked. Same setup, same session, same execution. So I thought, why not double risk? This is easy. Spoiler alert. It was not easy. The very next trade wiped out multiple days of profits. Why? Because confidence quietly turned into overconfidence. Here's the psychological trick. Your brain mistakes short-term success for long-term mastery. But trading isn't chess. You don't win because you're smarter. You win because you survive randomness long enough. The market is not a machine. You can't control news, liquidity, algorithms, stop hunts, and random volatility spikes. Yet many traders behave like, if I just manage this trade perfectly, it can't go wrong. That's an illusion. Every trade can go wrong. Even perfect setups fail. Control in trading doesn't mean controlling outcomes. It means controlling risk. How do you escape this trap? Keep your risk boringly consistent. If your system risks 1%, then 1% on bad days, 1% on good days, 1% even after your best week ever. Professional traders don't scale risk based on emotion. They scale based on data. Your confidence should come from backtesting, journaling, statistics, not vibes. Trap number 3, the recovery mentality, revenge trading. This one destroys accounts fast. And it usually starts with this sentence. Let me just make back what I lost. That sentence has blown more accounts than bad strategies ever did. Here's how it happens. You take a loss, then another. Nothing catastrophic, just annoying. Now your mind shifts from follow the plan to fix the damage. That's when you lower entry standards. You overtrade. You enter outside your session. You ignore confirmations. You're no longer trading the market. You're trading your emotions. I've had days where I took one clean loss and ended the day with 5 messy ones. Not because the market was bad, but because I couldn't accept being down on the day. Why this trap is so dangerous. Your brain treats losses like a threat. And when humans feel threatened, we don't think logically. We react. That's why revenge trading feels urgent. Your body is in fight or flight mode. You're not calm. You're not patient. You're not objective. You're desperate. And desperation has no edge. How to escape this trap? You need predefined loss limits. Not mental ones. Actual rules. For example, max 2 losses per day. Or max 2% drawdown per day. Once hit, you're done. No exceptions. No one more setup. Here's something that helped me. I started treating stopping for the day as a win. If I followed my rules, even after a loss, that day was successful. Because discipline compounds faster than profits. Why most traders never fix these traps? Because psychology is boring. Indicators are exciting. New strategies feel productive. Psychology feels invisible until it isn't. Most traders would rather change time frames, buy another course, switch brokers, than sit with their own behavior. But the uncomfortable truth is this. You don't need a new strategy. You need a stronger mind. Finally, let me leave you with this. The goal of trading is not to win every trade. The goal is to stay emotionally neutral, manage risk, execute consistently, and survive long enough for probability to work. The market will test you. It will humble you, tempt you, frustrate you. But if you can master these 3 psychological traps, you'll already be ahead of 90% of traders. Not because you're smarter, but because you're disciplined. If this video hit close to home, do me a favor. Thumbs up and like this video. It helps the channel more than you think. Subscribe if you want more real trading psychology content. Which of these traps have you struggled with the most? I will love to read your comments. And if you're still trading with ego, emotion, or desperation, you don't need to quit trading. You just have to evolve. Till I see you in the next video, have a profitable trading day.